The era of Bitcoin spot exchange traded fund has finally begun. Bitcoin spot exchange traded fund is the biggest positive news in the coin market. The U.S. Securities and Exchange Commission (SEC) approved the Bitcoin spot ETF on January 10th local time. The SEC announced in a statement this day that it has approved 11 Bitcoin spot ETFs that previously applied for listing, including Greyscale, Bitrate, and hashdex. The basis for approval is the loss of the lawsuit against Greyscale in August 2023. By March of last year, the SEC had refused to approve more than 20 trading full exchange 19 before firms for Bitcoin spot ETPs. Bitcoin, which had been purchased only on virtual asset exchanges, can now be invested through ETF products, which may lead to a large influx of new funds. In particular, financial institutions can utilize existing financial infrastructure and approach it like a commodity ETF. Accordingly, it is expected that there will be a large inflow of funds from institutional investors who were hesitant to invest in Bitcoin due to regulatory uncertainty. Currently, the amount of inflow funds predicted by traditional financial companies alone exceeds 130 trillion won. Additional increases are expected due to the inflow of funds that causes price increases. In particular, there are predictions that with this approval, Bitcoin will exceed 100 million won per piece and reach 200 million won. The analysis that the half-life approaching in 100 days will drive this is also gaining strength. In Korea, Bitcoin spot exchange traded funds are not allowed. Financial authorities say they will further review related issues and decide whether to introduce it. It is pointed out that social discussion on virtual assets is necessary. Under the Capital Market Act, ETFs must track an underlying index composed of underlying assets. The law recognizes financial investment products, currency general products, credit risk, and other as underlying assets. Financial authorities interpreted on January 11 that Bitcoin does not fall under this category. Since the securities company, financial investment companies can only sell a list of investment products specified in the Capital Market Act. It was also determined that it could be problematic for domestic securities companies to broker Bitcoin spot ETF transactions listed on the U.S. stock market. Ultimately, for virtual asset spot ETF to be launched, the Capital Markets Act needs to be revised. However, you can purchase a Bitcoin spot ETF listed directly through a U.S. securities firm. To do this, you must have a U.S. bank or a securities account. Since most U.S. banks only allow U.S. residents to open accounts, it is virtually difficult for Koreans to trade Bitcoin spot ETFs. The era of complex finance in which traditional finance and virtual assets are connected and fused is an unstoppable trend. Approval by the U.S. SEC indicates some degree of recognition of Bitcoin's transparency. However, Bitcoin spot ETF trading is virtually impossible in Korea. The Financial Services Commission announced that domestic securities firms brokering overseas listed Bitcoin spot ETFs may violate the existing government position on virtual assets and the Capital Market Act. However, the Financial Services Commission left open the possibility in the future, saying these fronts for virtual assets are being established, such as the Virtual Asset Under Protection Act, which went into effect in July of this year. And as there are overseas causes, such as the United States, we plan to further review it. Even if Bitcoin spot ETF trading becomes possible in Korea, foreign exchange listed ETFs are traded in the corresponding country's currency, not the Korean one. So you must also pay attention to the impact of exchange rate fluctuations due to changes in the financial environment. Even if trading profits are generated due to a rise in stock prices, there may be a final loss if foreign exchange losses due to a decline in the value of the currency are reflected. In addition, distribution from investments in overseas listed ETFs are subject to a dividend income tax of 15.4%, including local tax. Like bank interest or domestic stock dividends, if your income exceeds 20 million won combined with other financial incomes, you must report comprehensive income tax. Overseas listed ETFs must pay a capital gains tax of 22%, including local income tax, after deducting 2.5 million won per year on trading profits. But domestically listed overseas ETFs have different taxation systems, such as imposing a dividend income tax of 15.4%.